And Dubai's property market is showing early signs of cooling just weeks into the US-Israeli war on Iran, which is now in its fourth week. Now, according to Goldman Sachs estimates, real estate transaction volumes in the UAE fell 37% year on year in the first 12 days of March and nearly 49% compared to the previous month. Analysts say this marks one of the sharpest short-term drops in recent periods, surpassing declines seen during the 2024 floods and earlier regional tensions, while median transacted prices are only down around 3% year on year. The steep fall in activity is raising concerns that momentum in Dubai's real estate boom could be slowing. Early signs of pricing pressure are also emerging in parts of the market. Real estate agents report discounts ranging between 12% and 15% on select properties, and this includes both ready and off-plan units. At the same time, Goldman Sachs estimates that total transaction values so far this month are about 50% lower than February levels, and this indicates a sharp pullback in deal making, even if widespread price collapse is not yet visible. The conflict is now being viewed as the biggest stress test for Dubai's property cycle in years. Shares of major developers have fallen more than 20% since the war began. City analysts warn the geopolitical risk could slow Dubai's population growth to around 1% this year and potentially trigger a 7% annual decline in property prices in bearish scenarios through 2028. However, market participants say activity has not stopped entirely. Some investors continue to look for discounted opportunities and select high-value deals which are still taking place. Developers argue that long-term demand remains intact even as short-term volatility reshapes sentiment in the market.